talk about building up profitable trades quickly. So this is important because, as we know, there are three things, and only three things, 1, 2, 3, that we need for our profitable trading, which we're going to talk about all three of those things in the Small Accounts Big Profits course. You can click the link above or below to get into that. Now, it's still open. Now, the first thing, obviously, is a system that makes money, has a positive expectancy. Sorry that I'm losing my voice. I might have to take a day off from doing these videos, but but I do enjoy it, and thanks for the feedback. I'm glad that these things are helping you. Number 2 is you have to have risk rules that fit your goals. And that's kind of what we're going to be talking about right now today. And then number 3 is the psychology of it, making sure that your mindset is in a place where it enables you to actually execute your strategy and do the right thing when it comes to your trading rules, following your rules. So that's really what it takes, just those 3 things. So I want to talk about the risk and how that can affect your trading and really your ability to achieve your trading goals. That's what your risk management rules are all about. So what I want to share with you is this idea of trading. I'm going to have to share my screen here, I think. So what I'm going to do here is share my screen. This one. Here we go. All right. So you should hopefully see my screen here, and I'm even gonna zoom in a bit so that these numbers show up better for you. So you may have heard of pyramiding. The first time I've ever heard about it was from Bill Williams in the Chaos Trading book, but I couldn't figure out why I couldn't make his system work, and I realized the reason why it didn't work for me is because I wasn't adding the additional positions like he did and how he taught his students. But anyway, so it's in the Trading Chaos book by Bill Williams. But pyramiding is an age-old concept. The idea would be, let's say, these are the lot sizes that you take for your trade. And it works really well with a trend trading system or trend following system, obviously. So let's say the first position I take has 3 lots in it. And then I get another signal. So I take another position. And that might have like 1.2 lots. I take another position, that might be 0.8 lots. And then this is where it gets interesting. If I really want to improve my overall profitability, the next trade I take it starts to get bigger. So it's kind of like this hourglass shape. So I go 3, 1.2, 0.8. And I'm just throwing numbers out there, but this is kind of what it looks like. The next one that I take gets really big. So it might be like 4.5 lots. And then finally I might have my last one might be like 6 lots or something. And the idea here is that you use the profits that you make. You're obviously moving your stop and moving it to break even, but you use the profits that you make from the first couple lots to pay for or to set yourself up for the next big lot and the next big lot. So you're always ratcheting your stop loss up, and you might get stopped out at break even, for example, or even a very small win or a very small loss. But the point is, you take because these are so far away from the original entry price, they've built up a lot of profit, and they can pay for, quote, pay for the bigger positions that you take on later. But you need those bigger positions that you take on later so that when you achieve your target, you get a really big payoff. Okay, so let me see if I can actually share with you my screen. What I think I'll do. Can you see my what I want to do is share a Forex tester with you. That's really what I want to do. See if I can do that. That's what I want to do. Here we go. This should work, I believe, people. So what I'm doing right now is this is the what is this? This is the Aussie 8-hour chart, and I'm in Forex Tester, which is my trading simulator of choice. And so if I'm going to use this rule that I'm talking about of using the hourglass pyramiding, what you do, first of all, I need a trend. And so my favorite way to see a trend is to use my open position ratios. And I've had my fancy programmer create this page where it basically highlights the ones that are trending. So if it's blue, that means more than 70% of the traders are going short, so I want to go long. If it's red, it means more than 70% of the traders are going long, so I want to short. So I want to short Euro Singapore, for example, right now, and I want to go long pound CAD. It's the best trend indicator I've ever been able to come up with. But really, I mean, actually, let me share this with you so you can see it. I don't think that you saw that, did you? Here it is. So this is what I was talking about. So pound CAD, basically 70% are short, so I want to go long. Euro Singapore, 76% are long, so I want to go short. Aussie Kiwi, 92% are long, so I want to go short, and so forth. So that's the best trend indicator I've been able to come up with. And you can Google those open position ratios if you like and see them for yourself. But now what I want to do is share with you my Forex tester, and we'll do some trading, I think. All right. So the first thing I want here is I want to trend. And right now, I would likely have to back it up to make sure, but this is not a trend. So I'm going to wait until the market goes up or down, and goes up or down strongly, basically. Okay, this is promising because we've got this bullish formation right at the top of this resistance up here. So I could be headed into a trend right now. Let's see. It's good. Okay, now what I would do is I would say, well, I've got some pretty interesting looking bounces here. I've got 2 touches on this trend line. If it doesn't break the trend line, if it bounces off the trend line, I might even go long right here. Okay. I'll put a buy stop above. This is just a trendy kangaroo tail. I'll put a buy stop above the high, my stop loss down below the low. And we're going to use a big position here. Okay. So like I said, I'll just use the example I gave you. 3, for example. Okay. 3 lots. Okay. I'm in. Now, if I get another signal here, I can take another position. I'll move my stop loss up here to very close to break even. I'll put a buy stop above the high barrier here, but I'll put a smaller buy stop. Now, this could totally collapse and stop me out at break even or even a loss. That's okay. The principle still holds. Okay, now this one I'm going to do what did I say? 1.2, which is significantly smaller than the first position. Still adds, if it goes, and it did, it still adds to my overall profitability, which is great. Okay, I'm going to move my stop losses up here. And I'm just going to assume that my trend line is a little bit wonky. That maybe maybe that's a better spot for it. I don't know. So basically, I've locked in some profit in the first trade, and I've got a very, very small loss on my second position. If this bounces here, then we'd be certainly in a trend. And I will go 0.8 like we said before. Again, there's nothing magical about these numbers. I'm just pulling them out of my imagination. But this is the principle. The principle holds. This hourglass size positions. Cool. Okay. This is awesome. This is actually working out. Let's move the stop losses to break even here. So we're all at break even. And now I can start, if I get another signal here, I can start getting super aggressive. I might only do just one more, maybe. I don't know. If we come back down, bounce. Come on. Come back down. Come on. Okay. Not sure about that. Okay. I'll put a buy stop above the high here then. And this is going to be my big position. This is going to be like my 4.5 lots or something like that. And I'll put my take profit. I don't know. There. What's going on here? Okay. So I've got 4.5 lots. If it triggers, I can move my stops to here. So what's happening is though all of those previous positions I had, they're going to help me pay for this loss if I do get stopped out. Right? So let's see what happens. I'm in. Give it to me. Give it to me. Yes. Okay. Oh, the other ones, I have to close the other ones too. The other one should have been set there too. So, this, okay, let me just show you what are these going to get. Okay, great. So they all make money. Yay, yay. It's not always going to be the case, of course, but if I'm in a trend, this is definitely a possibility. The key is to move my stop losses after every additional pyramid. Now, so what did I make? Remember, the true risk was not reflected. So it made whatever, I don't know, 22% on the account. But the reason why this is important is because it's the algorithm, the position sizing algorithm that does the magic. It's not anything else, right? It really is simply the fact that I am taking my uh, I am taking my I'm taking my positions, and they're really big in the beginning. They get smaller, and those profits there pay for the really big fat positions at the end of the trade. And by ratcheting up my stop loss, I'm bagging some of the profits from the beginning positions, the first positions, and they're paying for any potential losers later on in the game. And it always comes later. Most of your losses are after lot 3, 4, 5, like that. Position 1 and 2, it's kind of easy to make them work. It's the later ones because the market doesn't often trend like we just had that example. So it's quite rare. But anyway, if this is the kind of thing that you like, we'll talk more about this in Small Accounts, Big Profits. You can click the link or above or below this video to get more information about that. It's open right now. I wish you happy trading. We'll see you soon. Bye.